Hi, this is the second part of a six-part series of videos on great. Now you have $100,000 to invest. What are your options? This video deals with option number one. The first option that you have as to invest your money is using financial analysis. The other four options are options which we'll discuss in the next four videos are sector surfer, moving averages, dual momentum, and macro strategies. But let's focus now on managing money using financial analysis. This comments on the use of financial analysis to establish an investment strategy and selecting your investments are based on two great books. One is called Incredible Shrinking Alpha, which I strongly recommend you should read. And the second one, Your Complete Guide to Factor-Based Investment. These are two essential books for the average investor. Again, I'm talking to average investor, not a professional investor. And these are two great books, and my comments are also based on personal experience. Most brokerage houses have great filters to select the best values, the probably what you think are the best companies because of their PE ratio, their yield, their debt, their growth, their income, and there are many of these parameters. My personal experience is that when I put all the ideal parameters that I would like to have, there are very few companies that meet those parameters. So you're back to square one, where selecting the ideal companies meeting those criteria, there are really very few. You will also find that the ones that you want, there aren't many already available. Strong stocks, my experience, they're always very poorly rated, and they look, quote unquote, they look overpriced. The thing is that the strong stocks are strong because there is a lot of momentum behind them, and there is a lot of conviction by professional investors that they will continue to do well. But once you do all this financial analysis that is available by all the brokerage houses, you have issues with the accounting filtering. Is that the accounting tells you what has happened in the past to the company, but you have some basic questions to ask, and is what are the company's growth prospects? No financial analysis will tell you that. What are the plans for the future? What is management thinking? What are the new products or services or markets that they want to get in? Why is the company doing so well? Is because of management, of course, because of execution, because of products. What is the management strategy? What are they planning to do? The big picture kind of thing. Again, these are all things that financial analysis doesn't give you, doesn't provide you the information. Is management going to deliver? In other words, what is the top management? Are they doers? Are they go-getters? Are they conservative, aggressive? But even when you go through all this exercise of answering all these questions, if you made this decision in the past, what kind of performance did they provide? And this and other important things, there are the professionals, investor, mutual funds and hedge funds, and they have huge groups of analysts that working full time in answering these issues. And my point is, can you compete with them in trying to answering these questions in time to make this kind of financial analysis and to do better than what they are doing? What is the bottom line? The bottom line is that doing a complete financial analysis to select your investment is a too complex of an endeavor for the average investor. Some knowledge, however, of course, is useful, but to come up with a complete analysis, as I suggested, is very difficult. And there is also the question that is such a complex analysis going to deliver better returns compared to other models which are much simpler? And then the issue can be back tested. So in order to do financial analysis the professional way, you need to work with large sums of money where you have analysts going, and I saw them sitting in front of the chairman of the board office and go and talk to them, go and talk to the members of the board, go and talking to the vice president of manufacturing or research, of marketing, pricing policies. And they do this kind of work, and it's very difficult for you to compete with this kind of professionalism because it takes a lot of money and a lot of time. This information is analyzed in detail in each issue of the Peter Duck Portfolios, and of course is discussed in great detail in my 3 books, Profiting in Bull or Bear Market, Easy Ways to Beat the Market with ETFs, and Investing Wisely. It is easier than you think. Again, thank you very much for listening, and I'll see you really soon.